Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 1st, 2023. It is 1:35 p.m. Eastern Time as I'm starting this video, and what we're going to do in this one is look at some, actually an individual sector ETF as a trade idea, as well as individual stocks. I continue to believe, and we've seen it, it's not just my belief, that this market is much more conducive to individual security selection, meaning individual stocks and or individual sectors over trading the broad markets. The indexes are pretty much flat today. The NASDAQ, as I speak, is down about 1/3%. Both the NASDAQ and the S&P about 1/3% down, pretty much flat all day. Down a little more earlier, popped up, but either way, so it's a flat go nowhere day. So I don't have any updates for you on the equity markets. That would be redundant to cover that. So let's just dive into this trade idea, or these trade ideas. I'm sorry. This one is PEJ. So if you want to keep it simple, this is an ETF, one size fits all. With ETFs, you get diversification. You don't have to worry about earnings on any one particular stock, having a big gap against your position. So it's also a good time to trade ETFs from now. I'm just going to say this up front. Nearly all these trade ideas that I'm going to give you are going to be short side trade ideas. A lot of them are short setups, still pending an objective entry or sell signal, and then some are actionable at this point in time because they've just broken down. And then the takeaway is, so number one, if you don't short, you refuse to short, you don't believe in it because of the market, you think it's going up or the sector's going up, save your time, because I'm not going to show you many. There's a few in here that look okay, but I wouldn't take it based on the overall view of the sector, the outlook for the sector. Remember, if you have the majority of stocks in a single sector, like for example the restaurant sector we're going to look at, going down at any one point in time, it's going to make it very difficult for the others. Birds of a feather tend to flock together. So that's number one. If you're only looking for long trade ideas, skip this video. And if you are a flexible trader and you want to outperform, because I believe going, taking the individual stocks that I'm about to cover in this video, putting together a subsection of your portfolio, should you choose to engage this sector. Put together, a half dozen, a dozen, whatever you can manage, 15, more the better, and build your own little portfolio. And in most cases, I found that you can outperform the sector, because what you're doing is, when I'm bullish on a sector, I want to go long the most bullish stocks within that sector and avoid the most bearish. Likewise, in a sector that I believe is going to drop, then I want to go short the most bearish and not include the most bullish. And that's what an ETF, a sector ETF, will do. It's blanket approach, so it's going to dilute your returns. And again, it cuts both ways. If you're wrong on your call, you're probably going to lose less in an ETF. And if you're right on your call, you're going to make more on the basket of individual stocks. Okie dokie, let's dive into it. This is PEJ. I'm going to actually do this at the end, the individual components. I'll rifle through them quickly. I wanted to start out with, and I did a video the other day, and I'm going to continue to update that for the restaurant sector. Okay, I was looking, that's IX 1320. I was going to queue that up in TC 1000 here. IX 1320 should queue up a list of these stocks. Okay, so we're not going to go through them all. There's a lot of restaurants out there, a lot of publicly traded restaurants, and of course we're not going to go through them all. I culled through the list, flagged my favorites, and there's only, just eyeballing it, looks to be a dozen and a half, less than 2 dozen. So we'll go through those quick. This is a sector as a whole. You can see here, back when the bear market or correction, whatever you want to call it, started, you had a negative divergence building. You had an uptrend line that broke. And just like the stock market, when you look at a lot of the sectors and indexes, you saw this topping pattern. It was about a year-long sideways consolidation where the stock market stopped going up, but it wasn't going down either until it broke down below that range. So pretty well-defined range. Again, this was I've covered this many times on the major indexes and many other big sectors. And so that kind of, that's what a topping pattern looked like. And we came full circle back here. This sector actually bottomed in mid-June. You can see it had some pretty nice divergence at that point in time as well, and hence the rally that followed. So you can see it's watch, rinse, repeat. And just like this divergent high didn't mark the top, you had two equal and ever so slightly marginal new highs, while that divergence just simply extended. And that's the story of a lot of things right now, I believe, based on my analysis and overall sectors, and even the overall stock market, seeing the divergences that have been building for quite some time now. And then I always say this, quite often, more often than not, but not always. More often than not, in my opinion, it's far from always. Always is 100%. More often than not, it means well over 50%, right? More often than not, divergences, whether they're bullish or bearish, positive or negative, will play out for a tradable trend change, okay? Simple stuff, right? Let's not overanalyze it. So this one's been diverging for quite some time now. We had that divergent low that gave us this rally, took the sector to new highs. Unless you're, been away traveling in a spaceship for the last year, you've probably heard many times over in the financial media about the resiliency of the consumer, and how after, really after COVID, but really it continues today, the consumer has surprisingly been extremely resilient in the face of rising interest rates and the quantitative tightening, and they have continued to spend. That story to me is getting extremely long in the tooth. Okay, I've been hearing about that for a long time. Have to believe a lot of that's priced in, and I also, my thoughts on where I think the overall economy and market's going. I don't believe in a soft landing. I think it's going to be a much harder one, but I think it's going to be a slower roll. That's been my expectation for a long time. So I believe this sector has a lot of hot air. If I'm going to be right on the market, this sector should outperform to the downside, because these stocks have a lot of hot air. And at the end of the day, I'll give you my fundamental thoughts. I do it all the time. That's one thing. Fundamentals tend to play out over time. Warren Buffett is a fundamental investor. He looks at fundamentals. He doesn't, he's not a chartist. And over time, the fundamentals will play out. Technical analysis, looking at the charts, is a much, much more accurate guide to kind of figure out where something's going in the very near term. So on this one, you can see we have a nice clean uptrend line. So that's why I like it. There's our divergence been building. And again, it's not, well, Randy, you talk about these divergences, they don't play out. Yeah, they do. This is a double-digit drop. That was a second divergent high, double-digit drop, another divergent high. This is just one consecutive series of divergences, and I could draw the same thing over here. We had it same thing, diverging for over a year, and little corrections within, and finally that very large divergence played out for a very large correction in the sector, a drop of about 27%. Okay, so on this, again, you have in my opinion, a beautiful uptrend line, rising wedge pattern. This one was a little steep. Either way, that's would project quite a bit lower. Measured target for a rising wedge. You take the widest part of the wedge, add that to where it breaks down. But let's get into the individual names now. Again, I won't go over each and every one. I've already given you two official trade ideas on this, CMG, Chipotle, and McDonald's MCD, and I'm going to go over the others here. This is YUMC, and again, this is a follow-up to, I did a coverage on the sector the other day, but I've marked up a few more charts, giving you levels, and I'm just going to go through quickly. If I have a favorite, I'll stop on it, talk a little bit more. There was your divergent high, negative divergence. The stock already fell quite a bit. This one has already dropped about 15-16%. So it shows me that this is a sector that may have fully run its course. We all have our views. Glass half full, meaning bulls will think, oh, this is just a correction and this one's going to go to new highs. Glass half empty, folks say, hey, this was a bear market rally, kind of stretched the upper limits of what would be a bear market rally, but still well below the previous highs, just like the restaurant sector as a whole, just like the stock market as a whole. Every index is still, below its 2021 or early 2022 highs. So that's that. Not one of my favorites. So because again, it's already not as much meat on the bone as some of the others here. Let me just go on to the next one. Noodles. I'm just showing you this one because this one's coming off a divergent low. This is one I would not short. And if anything, if you want to hedge up, you are bullish somehow, you continue to listen to this video even after I told you it's going to be mostly shorts. Here's one for you if you're bullish, and if it can solidly clear this little level here, you're coming off a pretty strong divergent low. This stock is just coming off multi-year lows instead of getting a lot closer to those old previous bull market highs like most others. But this is also, you can look at that as bullish. And this is what we've seen lately, the dash for trash. We've seen that with a lot of low quality stocks popping because people are bottom fishing right now. They don't want to chase Apple and Amazon and Meta anymore. They're too overpriced and divergences and overbought and all that good stuff. So here's one that had a trading range here. Could certainly run up to that trading range. But again, you have to ask yourself, okay, if the restaurant sector, as I just started out in the video, has made new at least 52-week highs, why is this stock, why is this particular restaurant down, flirting with, it's not at penny stockville yet, but it's not much higher. It's a $3. It was recently a $3 stock. It's $3.50 now. So be careful. That's all I'm trying to say. It's where we are in the economic cycle. Everybody has their opinion. Some of us will be right, some will be wrong. But if this economy, if we are heading into a recession, even a soft landing or a mild recession, that's not going to be good for the restaurant sector. That is a discretionary sector, consumer cyclical. That's what it's the restaurants are, meaning they go with this cycles of the economy, the expansions and contractions. So restaurants don't do good in contractions. People tuck in their wallets and eat at home. They don't eat out as much. So there's that those levels. Again, I shouldn't spend too much time on it because it's not one I care to take, but just had it marked because the chart stood out to me. BLMN, that's Blooming Brands. Covered it the other day. Outback, Carrabba's, Bonefish Grill, and others. And again, simple wash, rinse, repeat stuff. Big divergent high back here. Trendline break to give you your sell signal. I always say divergence is not a sell signal, merely a condition. From that point, the stock fell about 52%. Got cut in half. Would have been a heck of a short or a heck of a correction to sidestep if you were a bull along this stock in your portfolio. You would have sidestepped or averted a 50, given back half your money on it. Not all your gains and half of the entire position value. Okay, and then we came full circle, rallied up like everything else, stalled below the previous high so far, and it did so with negative divergence, and this one just triggered a breakdown. So this one is actionable. I covered it the other day. I'm assuming, and I didn't check before the video, this big drop today, that's probably an earnings miss. See it, 1 minute chart. And now, and that happened fast. I believe I know I covered this one in the video over last week. So if you happen to miss that breakdown, if you took it, you hit the first target and you made them 1 day 6-7% because that was a short entry. Again, it didn't gap and run away from you. There was the open right here. In fact, it went positive on the day early on, and then it went down to hit my target to the button. If you happen to short the pre-opening pop or post-opening pop, it went up and then it dropped about 8.5%. So boom. Now, what does that mean? So if you missed it or if you took it, you recycled back in, you took profits there, great time to get back in because now we're still below trend. So basically you're just back testing, and we'll probably close the day down below the trend line, and that'll give it another run down there and ultimately take out that line there. So I'll give you a second target right now since this one has now broken down. That would be about a little north of 22.34. Next up, Red Robin Gourmet. That's funny. Add the name gourmet to a fast food restaurant. That reminds me of Biden's Inflation Reduction Act. It's like silly. But anyways, Red Robin RRGB. This one, you have a nice, you have a lot going on here. Like many, you put in big divergent high. The stock got clocked hard, fell down, bottomed right around the beginning of the year. It's had a nice rally since, took out trend lines, took out moving averages. So there's a lot in there for the bulls to see. I get it. But let's just trade it on the technicals. If you like this one, what I see here is what appears to be a head and shoulders topping pattern. You look for those after a pretty good advance, and we certainly have been trending up. The stock so far peaked. It was about a 5-month rally, 212% return, and you have your left shoulder, head, right shoulder, perfect symmetry in the pattern right there. And this is what a head and shoulders pattern looks like. They are topping patterns. And then I have a neckline here, comes in around, you can see a little north of 12, you can replicate that, and an alternative neckline. If you look up these patterns, sometimes they have a down or upward sloping neckline. And so here's how you trade a head and shoulders. The traditional method of trading a head and shoulders pattern is wait for a break of the neckline. That's your sell signal once, and then you have a fully formed head and shoulders pattern. Right now I should have a question mark next to right shoulder because we haven't fully formed that right shoulder. However, what I like to do when I see a pattern that head and shoulders forming and it looks pretty good, it has all the makings so far, you want to see volume on this part from the formation from the head down, increase in volume, which we did. And now you'd want to see it here. We haven't seen a big increase in volume. From this point on, you want to watch, and ideally, those are the things I think very few people do. If you read up on these patterns, if you want to, increase your odds it's going to play out, you want to confirm it on volume. So you have a low volume rise up to the head followed by a high volume sell off forming the head. Same thing, lower volume push up on the right shoulder, which we've had so far, and then you want to see increased volume on that formation. Okay, so now again, the traditional method is to short a break on the neckline, but what I'll often do is once I see the pattern forming, if I think there's a good chance it's going to play out, I'll take a partial, even a half position, sometimes even a full position once the right shoulder's kind of turn the corner there and swing it down. And then if it's a partial position, I'm going to add on a break of the pattern. What that's going to do is give me a better cost basis. And my stop is going to be above that right shoulder. Because if we go up any higher, we've now foiled it. It doesn't mean the stock can't do that and then go down. It just means it won't be a head and shoulders pattern because you can't have the right shoulder higher than the head, right? So it's the RR. Everything to me is about RR, risk reward ratio. How much are you risking? You don't want to risk $1 to make $1. You want to risk $1 to make 2, 3 or more. And so, stop there is going to be a 10% stop loss. But if the pattern plays out, the measured target on a head and shoulders, you take the distance from the head to the neckline, add it to where it breaks down, and that gives you your measured target. And that would be about, from where we're at today, a gain of about 37%. So I'll mark that little target right there. It's also some decent support. And so that's RRGB. Jack in the box, JACK, same thing, negative divergence. You had a minor trend line break right there, a sell signal that took us down to the secondary, more significant uptrend line right now. Now that's the one to go. So this divergence has only gotten larger, negative divergence. The indicator's making lower highs and the price is making higher highs. There's your sell signal. So this one is pending a break of the trend line to trigger a sell signal, just like we had a divergent high there, trend line break right there. If you shorted that trend line break and tucked it away till it was time to cover and go long, then you made 52% on the short. Then you had a little divergence here on the RSI down below at that low and so forth. So far, that's been the rally. So this is a nice setup right there. DENN, Denny's. Denny's has just been falling. Denny's peaked back in 2019. This stock's been in a clear downtrend or a larger bear market sense. And here's our bear market trend line. I'm just circling all the reactions on this bear market trend line. So that's it. So on this one, not one of my favorites. I like the ones with a little more meat on the bone. I like these topping patterns, wedges, and head and shoulders. However, this one, you could certainly make a case to short anywhere here up to, but not above the neckline because you want to have a stop somewhat above. I like to give it at least a daily close. Sometimes you get these little whipsaws. If you look back here, you'll get a day or so, especially intraday pops. That's why you give it a little bit of room. And if you can, you allow it on a daily close. I can tell you right here, too, there's that's about 1250. You have a couple reaction highs. So ideally, that 1250 level should contain any bounce. So you could have a stop there and then swing it down. Where to? Just, if it starts to play out, these are swing trades to me that have potential for most of them well into the double digits. So we're talking 20, 30% plus on a lot of these. So I'll continue to update the sector. And again, remember, the other takeaway here is, as I'm going through these, some of these have broken support recently, triggered an objective short entry or sell signal. Others haven't. And just like those market-leading FANGs I'm waiting for, I'm doing check marks. And you need to have the majority of the big market leaders, the big tech stocks, break down. And once you get that, then there's a good chance the market's going to roll over. I'm just putting another level there, resistance level on Denny's at 1305. ARCO, not one of my favorites, but it is diverging and it has a steep ascent, maybe a blow off top here. The stock tends to do that every now and then. You get these buying climaxes. You can see them on increased volume. You might not be able to make it out in the video, but I do have a volume spike there. And that tends to happen every now and then. The stock consolidate has a rip up, and that's it. And then the stock corrects. Moves up. It was stair stepping higher, and then had a rip up, and it corrected. And this is a rip up. What do you think the stock's going to do? This go up another? What's that? That whole rip is 63%. So I think it's safe to say this one's probably going to come back in at the least, even if you're longer term bullish. This one's got a good chance to come back in, maybe test these reaction highs right there. I'll give you a rough target right there, about $9, and that would give you pullback of about 18%. Wing, W-I-N-G, this one already broke down. This is Wingstop, and you can see it broke. There was your sell signal, beautiful bearish rising wedge. So this is almost identical to a lot of the other stocks I'm showing you in the sector. So what you're doing on those, some of these have already started to roll over. Other ones haven't. And this one, since it broke down, so far it's down 17%. So I think it goes lower. I think the sector just put in is about to put in, or has put in, a major top. Again, I started out with the sector, showed you where that sector trend line will break down, and that's going to increase the odds that these guys are going much lower. So you might say, I'm not crazy about shorting a stock down 17%, but on a kickback to this level, that's former support, now resistance, 175.71. Oh yeah, all day long. So that would be an objective short if we go back there. Maybe want to backfill this little gap right here a little bit above there, and then add a short on that one. QSR, this is they own Tim Hortons, Burger King, Popeyes, Firehouse Subs, or they supply them. I forget how it is, or they do the franchises for them. And that's it. Divergent high. Simple stuff. It's going down here, $71 at least minimum. Divergent high, drop. Divergent high, drop. Divergent low, rally. So anyways, wash, rinse, repeat. And this one still looks good. You might, give you a level. I think just eyeballing it right here, you've got this little area of consolidation recently, about 74.90. Once it breaks that, it'll probably give the ghost. There's a little bit of support there. You had a top of another consolidation zone, but ultimately I think it works its way back down. I'll tell you. Let me give you another target now. Let's just make at this point in time the current final target, 68.59. That would give you a drop of about 9% from here. EAT, this is Brinker International, Chili's, Maggiano's Little Italy. It's just wings. Uptrend line. I have the divergence up here because technically that was a high, but it's been bouncing on this resistance level here, about 41.50. Now it can push up. So right now it's a little bit in no man's land. By that I mean it's up well above support, but also below the nearest resistance. So if another thrust up there, especially if it could pop that, and even better if it can pop that level and then have a false breakout above 41.50, that would probably bring it back down at minimum to the trend line, and then ultimately, because of this big divergence, see it break down there. And you can kind of see the trend. A lot of these guys are still in bear markets. Say what you want about it, but it's well off the previous bull market highs, and it's been zigzagging lower, and it still hasn't taken out a lot of these previous reaction highs. So it looks like big bear market rallies to me. YUM, this is Yum Brands, KFC, Pizza Hut, Taco Bell, Habit Burger Grill, and maybe it would be nice to see, especially I don't know if they've reported yet, probably not. I don't see any big moves. There's a little swoon down, but if it could pop on earnings, get up here, and then give us that nice wedge, that divergent high, especially reversal. See, if you want to play it safe, and I'll say this market has been resilient, I will give it that. So if you want to play the safe bet and it does pop up. Now, the aggressive play is to short that pop up. You're going to have a divergent high. You're going to have a nice wedge. It'll probably fail the breakout, because breakouts that occur with negative divergence and overbought conditions, from my experience, have a much, much higher rate of failure, well above 50%. All right, so that is a big level. This is our previous reaction high. That's that 139.55 level I have. We've been checking. We had a false breakout there. Tried it again. So I can tell you right now, it is objective to short it here at that level. But your next objective shorts will be a break of the trend line. That's kind of your all-in moment, the trend line break. Or if you get the pop up and then it fails the breakout, meaning it pops above 139.55 but then falls back below it, and especially below the trend line, this guy's going a lot lower, down here at least 122.56 in my opinion. Starbucks, head, left shoulder, head, right shoulder. Here's an example of, no, that's a flat neckline there. I have an alert set there at 96.97, so almost $97, a little below, and that gives us this nice left shoulder, head, and potential right shoulder forming right now. You don't have to have the shoulders exactly symmetrical. This one's a little shy now. If it pushes up, that would be another one. I don't know if they've reported yet. If they do and they pop up to that 107.70, that would give it a perfect right shoulder. And you could even take a shot there with a relatively tight stop. Relative, what does that mean? Well, it's relative to what you're targeting. You know, it doesn't mean a 0.5% or 1% stop loss. It means if it pops up to 107.70 and you think this one's going down, I certainly wouldn't give it a stop much higher than right here. You get up there, you'll have a pretty asymmetrical pattern there. There's your previous shoulder. So somewhere up there's a big old gap to be backfilled. That would still give you a nice right shoulder, and so you'd stop out above there. And then relative, of course, means to the downside. Now, this one may have enough of a right shoulder now, and if it does and it goes and breaks down, again, measured target, widest part of the wedge to the head, do that there. Assume that it breaks down right here. There's your neckline. That's going to take us, look at that. I didn't do this ahead of time. That's the target I had, 81.93. Perfect measured target, and that's nice support right there. And from where we're at today, it's going to give you a drop of, if hit, almost 20%. If it pops up to 107.70 and you got to short it there, and it goes down, then you have about a 24% gain. So, you know, using even a 4-to-1 RR, which is an excellent risk-reward ratio, you could give yourself a 6% stop loss. Now, I wouldn't give a 6%. It's, you know, that's going to take you up above that, right up to the previous head. So I would use a less than a 6% stop, much less than that. And then you have an even better RR. All right, guys. And this one, again, let's not forget, I kept talking about the head and shoulders. This one already broke down from this wedge right here. Divergent high, right? Negative divergence. Breakdown. And so forget about the head and shoulder. It's objective here because it's a wedge. It's broken down. It's kicked back to about the breakdown point. And, you know, maybe a half position here. Check earnings, obviously. If earnings are out of the way, you can take a heavier position. If earnings, they haven't reported yet, maybe wait till they report to add to position there. DRI, Darden Restaurants, Olive Garden, Longhorn, Steakhouse, Ruth's Chris, Bahama Breeze, etc. So a lot of these are big chains. Big old negative divergence. This one just broke down, so that is an objective short. Right now, this is our breakdown candle. Kind of sliced through there the other day. We did have a breakdown on Friday, and we back tested yesterday, and now we're moving low, and we took down that breakdown candle, took it out today. So there's one minimum target right down here, the intersecting uptrend line of 159.60. That's about almost a 5%, a little less, 5% drop from where we're at now. And then T2 give you about a 7% drop, T3 10.5, T4 about 13%. All right. Next up, a few more. TXRH, Texas Roadhouse. Needs to solidly take out the trend line. Then these are that's first support. I wouldn't call it a target, it's so close. T1, T2 right there. McDonald's. All All right, I got this one out to you yesterday as an official trade idea. And somebody asked yesterday during the day, hey, is it a breakdown, a trigger sell signal? No. Remember, if you have to squint at the chart to see if it broke down, it didn't break down. What you want to see is an impulsive move, high volume, and a solid breakdown. Now, what I said yesterday in the comment section as my reply is a break under yesterday's low should do the trick. Yesterday's low was 290.05, so I have an alert set at 290.04, which I believe will do the trick. Take it down to the first target, second target, whatever I gave you before. Yep, T1, T2, and potential T3 if we can get some traction in this sector to the downside. Pizza, not one of my favorites to short. Because we're coming off that big divergent low right here recently. However, you can see, and I wanted to talk about this too. Again, something I've said many times in the past, but not recently, so it bears repeating. When you have a stock, let me just draw my divergences. It's bothering me that they're not on here. Sometimes they just disappear. That was a divergent high, big blow off. Look at that big blow off buying climax candle, that big giant green candle followed by a reversal, and that marked a significant top. Then the stock fell 53%. But here's what I wanted to cover: overbought conditions, which means on the 70 level on the RSI. Sometimes you'll note that I have higher lines on my RSI. Because some stocks, I don't go off the 70 level just because that's the default on the charting platform. I study every chart, every stock, every index on its own. And if I see something that often pierces through 70 and keeps going, and there seems to be a higher ceiling, then I'll put a second line there. Like, for example, on this one, you could say right now, it seems to be, the magic number seems to be about 75. That really does the trick on PZZA, which is Papa John's. And so here's my point. Overbought conditions in a bear market are like oversold conditions in a bull market. Usually they're one and done. So what I mean by that, well, exactly that. In a bull market, it's rare to see overbought. When you get it, buy it, and it rarely stays overbought. However, in a bear market, and this is what, one of many, many things that makes me believe we're still in a bear market overall. Many stocks, a trade of a bear market, it's just like a bull market in reverse, whereas in a bull market, overbought tends to become more overbought or stay overbought for an extended period of time, which is what it did there. And if you go back to the left of the chart, you'll see a lot more of that. There's another, that was the end of the bull market. That's bull market characteristics, extended and persistent overbought readings. You don't short overbought in a bull market, or you get hurt, and you get hurt bad, and you get hurt often. In a bull market, you buy, it's simple, but you can just buy almost every single pullback to oversold, because it's usually, again, not always, but usually one and done. That's it. And if you have a second tag, it's usually pretty close, and that's it. However, the opposite holds true once a bear market starts. Overbought tends to then become one and done, as you can see here on all these little purple arrows, and you can see what happened. You can measure it out for yourself, replicate on your chart. And so that's usually all it takes. And so far, we hit that overbought reading, and then boom, this stock has been selling pretty hard the last few days, 6% down so far. And sometimes that's all you're going to get in a bear market. You don't always get a pushback to resistance or a trend line break or anything else. So again, good chance this run is over, especially if we're in a bear market with more downside to come, or at least in this sector. It is possible we continue to see sector rotation, and the S&P could work its way higher and make new highs at some point this year. We're not that far from it. But that doesn't mean that the restaurant sector is going to go up with it. That sector could certainly correct. We have, they call that a rolling bull market, or in reverse, a rolling bear market or correction, where different sectors take turns going up or down. So anyway, that's that. A few more, and then we'll go to the other, the PEJ holdings. Shake Shack. This one looks like it was a long back here. I had two targets. I guess that T2 was hit there. We went long on that divergent low. And then it broke out. It finally took out the bear market downtrend line. It's been rallying, but we've come full circle. Negative divergence, bearish rising wedge, which just broke down. At this point, now you need to break 76.26, maybe a little lower. Let's just go with the recent lows. And so a break under 75.86 would do the trick. That's the recent lows there. And here's how I do it. I'll do 75.85, and then I'll set an alert. And then if in the next few days, maybe 3 months from now, 4 months from now, I start getting alerts going off and I notice that there are several of these that I set in the restaurant sector, then I know I was a little bit early on it. And again, I'm not heavily engaged. I have a couple individual shorts, ones I've shared with you, but then I'll know it's time that the sector's breaking down, and then I can more aggressively engage it. Wendy's, not one of my favorites, but this one's just been range bound for years. This is just a dead money stock. Look at that, going all the way back to 2019. This is the top of the range, about 24.50, the bottom about 18.90. Based on my outlook for the sector and the fact we just put in a divergent high, my guess is the next stop's going to be at least the bottom of that range, and if so, that's going to drop this stock about 20 or 12%. I'm sorry. And again, not one of my favorites, just pointing it out. I had it flagged. CMG, I already gave you this as an official trade idea, pre-earnings play, popped down after earnings, and still very much an objective short here, kicking back that first target, which was already hit. You look at the weekly chart. I think I had some stuff marked up. No, maybe not. But a big old divergent high. I mean, the potential for these and a lot of other stocks, when I look at the weekly charts, to fall. This one was, I need to move that line over. That was the pre-COVID highs right there. You can see we had divergence building right into the COVID highs. So it wasn't, COVID will always go down the books as a black swan event. But again, there were so many individual stocks, including the market as a whole, that we're pricing in a bear market or a big correction. Again, when you look on the weekly chart, when I jump over here on a weekly chart, I'm not talking a trade that's going to last a couple hours, a few days, or even a few weeks. These are trades that last, trend reversals that last usually months and quite often even years, depending on the magnitude of the pattern, the scope of the divergence, and everything else. Two more restaurants, Nathan's, N-A-T-H, Nathan's Famous. Those are hot dogs, I believe. Big old negative divergence right here. Yeah, just like you had big old negative divergence right there, and probably had divergent low at the bottom there. So, and that's also at resistance, you can see there to boot. So this one's objective right now at resistance with coming off that divergent high. DPZ, Domino's Pizza, coming off a big divergent low, but again, bear market, extreme overbought conditions, unlikely to last, and big resistance. So you could take a shot on this one with a stop somewhat over that 414.70 resistance and target a backfill of this big old gap. So you're risking about 6% to make at least 13%, on the downside. All right, and now PEJ. Again, I don't believe, if you find one, let me know. A restaurant, I think, oh no, I did give you a restaurant ETF. It was like EATC, I think, but it was very thinly traded. So you can certainly use that one. I covered that in the previous video. You can check below, click on any of the restaurants in this one, and it'll queue up on the symbol tags that I put below each post. Those are hyperlinked, and it'll bring you to the previous video where I covered all those. PEJ, I'm just going to rifle through the holdings to kind of paint a picture. Again, PEJ is the leisure and entertainment portfolio. So this has your restaurants, a lot of the restaurants I covered in there, but it also has things like the cruise liner, everything that's had this big, that the media has been croning over, all these consumer spending, going to hotels, casinos, cruises, vacations. That stuff's in here. So we're going to go through it real quick. Well, there's the sector. There's your uptrend line. There's your divergence. It's a big divergence. That's big resistance. 42.34, give or take. That was support. Once it broke, it became resistance. We're just slightly above it now. If it fails, that's going to be bearish, and then we break the trend line, that's going to be even more bearish. That's how the sector looks. Again, there's an ETF if that's your way to go. BKNG, Booking.com, big old divergent high right there, and a breakout recently. So, based on this divergence, I would have enough confidence to short it now, and I just might. I haven't yet, and then because I believe this breakout will likely fail based on my read on the chart, and if it does fail, meaning a move back below 2,700. That's very bearish. That's a false breakout, aka bull trap, and that's going to send this stock quite a bit lower. MAR, Marriott International, on watch for a breakout to fall back below 196, same thing. And if that happens, you're also going to take out this trend line right here. So you have divergence and overbought conditions, hence the reason I expect this breakout to fail. Minimum target 181.57, which should come in roughly with that uptrend line right there. Again, minimum target. If if these guys start to pan out, I'll continue to do updates on the sector and let you know at that point, hey, do I think it's going to take that out and head a lot lower? Again, I'll let you know at the time, if and when we even get the breakdown. This one hasn't broken down yet. CMG, already covered that one, previous video. Las Vegas Sands. I spy with my little eye as I'm just looking at this now for the first time with the fresh set eyes. Neckline, left shoulder, or maybe even a complex head and shoulders pattern, which would have two right shoulders and or two left shoulders. But let's just say left shoulder, head, right shoulder, or again, you can have two. That's called a complex head and shoulders pattern when you have double shoulders. So it certainly takes the form of that. There's your neckline. Let's set a price alert under there, edit, turn up the level, color it up yellow, and set a price alert. And when that goes off, that would be an objective short. Now, again, here's the left shoulder right there. Here's the right shoulder. You can take a shot with a stop somewhat above, a relatively tight stop, and that's going to get you in a lot better price. Swing down, and then once a breakdown occurs, minimum target's going to be down here, right about there. Let me give that, light that up for you. I'll make it purple, so I remember next time. About 48.50. SYY Cisco Corp, not the computer switching company. This is Cisco, the food company. You see their food trucks. I'm just drawing these divergences way back there. Big divergence, correction, divergent high, correction. This one just broke out. I wouldn't short it. If anything, I'd go long this one. But I'm not going long based on my outlook on the sector. Again, these are the trucks that bring the supplies to the restaurant. So I just wanted to point that out that, if you're bullish, there's a setup for you. RCL, ooh, yeah, these cruise lines. Look at that. Major resistance, breakout. All this thing needs to do is fall back below 98.90, and it's lights out. I suspect it will happen. You also have the potential for an island cluster top. That's when you have a cluster of candles like this separated by gaps on both sides. Right now you only have one gap, so watch for a gap down and then a break below. Let me move that down a little bit. Let's just call it, to be safe, 97.50-ish right there. And then the potential is this uptrend line. This is where I think the stock is going minimum, and that's about a 28, almost 29% drop from where we're at. And again, when I look at the weekly charts, I see the potential for a lot more downside. RCL, Royal Caribbean. YUMC, I already covered that, I believe. That's a restaurant. MGM, big divergence at resistance. See that previous reaction high back here. Previous reaction high right there with negative divergence. Target is the uptrend line, and 46.32 is your first stop, actually. FOXA, no opinion on that one. That's Fox Corporation. UAL Airlines, I told you I was bearish on those recently. Saw quite a few reversing, breaking down, just put in a divergent high, and just triggered a sell signal after putting in that divergent high. So I'm not even giving you, well, of course I will. That's what I do, give you a target roughly. I'll have to study the chart a little further, but let's say at least 46. That'd be about a 13% drop. No opinion on Warner Music Group, WMG. Hyatt Hotels, symbol H. Break of this trend line. You have a big divergent high. Minimum target right here, 106.39. That would be a drop of about 15%. WYNN, Wynn Resorts. Divergent high right there. It already had a first leg down, had a little kickback rally, put in a big divergent high there. Did the same thing. Nothing goes down forever. Remember, you go down. A lot of times you'll find support. You get a couple snapback rallies, but you stay below the previous highs and then lights out. So that's exactly what's happened so far. Let's see if we get lights out. Minimum target, minimum target 80.44 right there. And next up would be PARA, Paramount Global. I don't have an opinion. It's got big support here at 15. If anything, I'd probably be long this one now at support with a stop below. But I don't have a strong enough opinion. Just want to point out I wouldn't short it. If it breaks that 15 level with conviction, even that previous reaction low, maybe. USFD, bearish rising wedge. Sell signal comes on a break below that trend line and or that 42.37 level. There's my alert. Lot lower. I don't have a target for you right now. DN Churchill Downs, divergent high correction. This is big resistance to resistance, right? This is what I'm talking about, guys. That's a false breakout, a bull trap. Big, and look at it. Big, powerful, because see, the breakouts to new highs are, especially if they're pretty well defined. This was a triple top here. That just is a massive short clearing move when you see a big green candle like that, because bulls inherently love, and believe me, I've been on both sides of the trade. I love breakouts to new highs if you don't have the divergence. But as I say, the divergence in overbought conditions will most likely see that breakout fail. What makes a new high bullish is everyone at that point in time is profitable on the stock. So bulls tend to, the breakouts to highs bring in new buyers. It's also hot money. And then those buyers, once they realize the breakout has failed, which this one did, once it dropped back below that 130, that previous high right there, roughly 130 or so, it didn't just kind of meander around. It gave up the ghost, and this thing dropped, from that level. And within 4 or 5 trading sessions, 12.5%. Now, would I short it here? No, because that would have been roughly my first target right here. You had a reaction high, reaction low. I'd stay away from it now, but it's probably going lower. I don't know. I don't follow horse racing, but what I do know is the woke mob has been out to get just about everybody lately. They shut down dog racing a few years back. The greyhounds, and I get it, I do, and they're out there. I'm sure they're clamoring to stop horse racing, and I know there were some doping incidents in the last Kentucky Derby. So at Churchill Downs, I think some few horses died. So anyway, that's not a good sign. But again, the takeaway is that's a failed breakout, and that's going to have longer term repercussions. Probably bring that stock back to at least 87.50. But I wouldn't short it unless 14, that 14-ish support level goes. If it does, that's about a 23% drop. And if it bounces first, any kickback to the 130-ish level right there would also be an objective short entry with a stop somewhat above. You'll even have a downtrend line to come into play. So those are your two objective levels, a bounce back to 130-ish or a break below 114-ish, right? Okay, a few more. FWONK coming off a divergent high, needs to break this to trigger sell signal 69.62. If I don't have an alert, I might already have one. Target 55.78. That would give you about 20% drop profit. EDR, Endeavor Group Holdings, no opinion on this one. Just walking up that uptrend line. BYD, rising wedge, clean uptrend line in which to trigger a sell signal. So I'll go ahead. And this is Boyd Gaming, another casino. I mean, how much longer with rising rates, swelling credit card debt? I went over that the other day. How much longer is this consumer going to continue to go out and drink, gamble, vacation, take cruises? I don't think a lot longer. Either way, I don't care. It doesn't matter what I think. What I can tell you is these are support levels. These are support levels and bearish chart patterns that are likely to cause a correction, a trend change, if and when triggered. Some of these, like I said, are already actionable, have already broken down. Others, like this one, just need a little more downside, and then they'll trigger a sell signal. And then down we go. LNW, Light and Wonder. Wash, rinse, repeat. Divergent high, correction, divergent low, rally, divergent high with a big old bearish rising wedge as drawn by those lines. Correction, minimum target 56.28. From where we're at today, that's a drop of about almost a little over 19%. Next stop down there would be about a 30% drop. And then ultimately 41.35. ALK, Alaska Air, another airline, broke down, and when it broke down, it gave up the ghost. Big drop right there on that red candle. Break of both price support and uptrend line support. Probably heading lower. MSGS. Big old fat divergent high, little buying climax, blow off candle, and then already starting to get reversed. So you could, this one like this, what you do, you take a shot here. put a stop just above the highs. Not even if it gets anywhere close to the highs, you might even put a stop a little bit below that previous high or just above it. It's up to you. I mean, again, if you're looking for a gap backfill, which I think at minimum is where this thing's going, that's going to be a drop of about 9%. So you could easily give yourself a 3% stop, and that would be just above, right around the previous high. And now, remember, this is large, big divergence. The last time I put in a divergence, it wasn't even that big. Was right here, and the stock fell from that point. It dropped 33%. So there's a lot more. I'm showing you initial targets, and those may be the only targets. If this is just going to have, if we're going to have a correction in this sector, followed by another leg up, and bull market's going to run to, the S&P is going to run to new highs and beyond this year next, and then that's all you're going to get. You're going to hit those initial targets most likely, or the secondary targets, and then reverse. WING. Breakdown, sell signal 1, breakdown number 2, below 175.70, 175.70. So it looks like it's bear flagging right here. A breakdown below the recent lows out of that flag would take us down, or kick back to that 175, call it 176 level, would give an objective short entry or add-on there. WING, wing stop. Wendy's already covered in the previous one. LTH. Lifetime Group Holdings, another leisure company, big old divergent high. And see, this is a lot of these. Once that divergence kicks in, once it becomes clear to the masses or the forces, again, this is not magic. This isn't black magic or any kind of witchcraft or anything. These are technical forces that are being applied to a stock. And again, they're not 100%, but they're effective enough. If you go long enough of these divergent lows and wait for, especially for buy signals, candlestick reversal patterns, breakouts of trend lines, downtrend lines, things like that right there, then that's you do that enough, you're going to have more winners and losers. And if you use good risk reward ratios, you took that breakout, let's say, and it failed, you had a reasonable stop, then guess what? Nobody bats 1,000. But you take 30 of those trades, and 20 or so are going to play out, or if not more. And when they play out, they're going to play out big. And this is more of trend trading here. That breakout right there, if you took it, the stock rallied 114%. Put in a divergent high there, and it just broke. Let's see if we even have a trend line here. Let's just play. Yeah, that would be the trend line I would use right there. Breakdown, back test, high level back test. And so, this one has plenty of downside left, in my opinion. CPA, Copa Holdings, big divergent high. It must be a resistance level from way back when. Yeah, there it was, all the way back to 2018. Resistance there, and also had support right there, so that becomes resistance as well. That's an old line I've had forever. There's that divergent high. Minimum targets, the uptrend line, and then if the uptrend line breaks, we're probably going quite a bit lower. I haven't updated this chart in a while, other than just marking up the divergence. TRIP, TripAdvisor, that's coming off a big divergent low. I wouldn't short it and leave that one alone, or take it long if you want to hedge in the sector. CNK, Cinemark Holdings, also wouldn't short it right here. It just broke out of this downtrend line. Did put in a divergent high and got rejected off resistance, so it could go lower, but it has to fail this breakout. I'm talking about this breakout of the primary bear market downtrend line right here. So failure of that will probably send it quite a bit lower. Other than that, if anything, you go long here above support or on a breakout above 1911, that recent high. SPHR, no opinion there. Cash. This is Pathward Financial. I mean, look at this chart. I saw this, it just stands out. I'm like, my God, this is wash, rinse, repeat, easy stuff. Divergence, negative divergence, divergent high, nice clean uptrend line, and which to trigger an objective short sell signal. And let's just measure out what you would have got if you would have traded these trends. And I'm playing the game that you shorted the highs and caught the lows. I know that's not in reality what you're going to get, but you're going to get a good bulk of that, if you position right for these. That's a 54% drop off that positive divergent low, and I'm sure I could put, make a case on a 60-minute chart, some kind of buy signals. 125% rally, turn around from there, and it dropped 68%. And I forgot to mark it up, but of course put in a divergent low. This stock has a very, very clear pattern of putting in divergent lows and divergent highs and mounting high double to triple digit rallies and corrections. That was our last divergent low right here, and we've come full circle. We just put in a divergent high. And so my expectation, if this pattern repeats, and I don't see any reason why it wouldn't, of course there are no guarantees, we could make an even larger divergent high first, but this one's going to go a lot lower. Okay, I might have bit off more than I can chew there, going through both the top picks in the restaurant sector as well as all the holdings in PEJ. But that's what I wrapped up. That cash was the last one in there. There's 30 stocks that I have at least on my watch list, and so I just went through all of those. So there's plenty of individual trade ideas for you. Take them or leave them, and I will continue to hunt for some long trade ideas as well. This is just a sector that stands out and warrants 1 hour of my time to give you all these setups and talk about them, all that good stuff. All right, guys, this has been Randy Finney with Right Side of the Chart. Have a great day.